Hello, good evening. Good evening. Good evening. Good evening. This video is a brief class on loss relief. So loss relief is a relief. It's a relief, right? Granted to taxpayers when they make losses in their business. So if a business makes loss, and how do you know when a business makes loss? When the total operating expenses exceed the assessable profit. The assessable profit is the profit accessible to tax, okay? So at that point, the company has made a loss. This loss relief can be available to individuals and it could be available to companies also. So it means when a company makes loss, it is entitled to relief. You know, when a company makes loss, tax cannot be charged because tax is charged on profit. So when they make a loss, after not paying tax, they will also be relieved of their loss. And how? Is by setting it off against subsequent profits in subsequent years or years of assessment, okay? So there are two major types or two types of loss relief. We have the current year loss relief and the carry forward loss relief. The current year loss relief is available to just individuals, while the carry forward loss relief is available to individuals and companies. In the current year loss relief, the losses made from a particular line of business cannot be set off against another line of business. Maybe Dangote Cement, they made a loss. You can't take that loss and go and relieve it against Dangote Sugar or Dangote Salt. Okay, so that Dangote Cement has to make a profit in subsequent years before that loss can be relieved. But in carry forward loss relief, the profit of a particular segment or department or line of business can be set off against another line of business. Do you understand? For the current year loss relief, you need to write an application. It is granted upon approval. So there must be a written claim that must be submitted within 12 months after the year when loss was made. Okay, the written application must be submitted within 12 months after you made that loss, the loss year of assessment. While for carry forward, it does not need application, it does not need approval, it's just normal, it's natural. That's the most common one that you see in questions. So once you see a loss, the natural thing is that you should carry it forward. It's available to companies, and in most questions, they always give you companies, ABC code. Okay, so let's go to the rules. Yeah. The first rule is that the trading loss to be relieved in a particular year of assessment must not exceed the loss that was incurred in the previous year of assessment. Maybe in this year, there's an assessable profit of say 10 million. So there was profit in this year, but you've been carrying forward some losses. Let's say you have a cumulative loss of, let's say, 6 million. You can see that 10 million can actually cover that 6 million. That is 6 million can be relieved from the 10 million, but you won't relieve everything, the whole 6 million. If the previous year's loss was probably 2 million, you can't relieve everything. So the restriction is the previous year's loss relief. Does that make sense? Yes. So the second rule is that losses are relieved as they occur. Do you understand? That is, maybe you've been carrying forward a cumulative loss, and let's say it's 6 million. So you can't just relieve like previous year's loss. You have to relieve it as they occur. So it will be the earliest one that you relieve first. Do you understand? The third rule is that upon cessation, any terminal loss that is existing is deemed lost. Do you understand? So if the company ceases operation, that's cessation of business, you cannot do anything about the loss. Any loss they have, maybe 6 million loss that they have that is unrelieved, it is deemed lost. Okay, then the next point is that in the act there's no provision for carry back losses. You know, just like in capital allowance, there's a provision for carry back of capital allowances. Okay, so when it comes to loss relief, there is no provision for that. Once you get to the end of the year, every existing loss relief is deemed lost. Jesus Christ, English is hard. Can we just learn this thing in Yoruba? The next point is that, I think that's the last one, is that loss relief has preference over capital allowance. So you know how we start computing company income tax. Now you know all these things is on your journey to company income tax. You need all these variables. So you start from profit, you do your adjustment, add back taxable income, less all those things here. Then you get to your accessible profit. Once you get to accessible profit, the first thing to less is your loss relief. So far there's an existing loss, you will settle loss relief. So loss relief comes before capital allowance. Okay, I've talked too much. Let's solve a question briefly. This topic is actually very simple. If you read textbooks, you would understand it. Okay, very easy. So let's solve a question. Let me read this question on my system. We're going to solve it on the screen. So let me read this question. So this question is a very simple question. This question says, Igbedowo Nigeria Limited, an agricultural company which was incorporated on February 1st, 2012, commenced business on May 1st, 2012. The company makes up its accounts to December 31st each year. The following information is provided below. I will put the question on the screen. Okay, so they gave you the adjusted profits for the year ended 31st December 2016, 2017, 2018 and 2019, you can see that in 2016 a loss of 80,000 was made, but in subsequent years they made profit. Then set capital allowance for each years of assessment are given: 2017, 2018, 2019, 2020. See, 2017 year of assessment means 2016 accounting year. Sure, you guys understand that preceding year stuff, right? Then they said the turnover of the company was 101,300,000. Sorry, that's just clear that the company is not a small company, and yeah, small companies are less than 25 million. Then between 25 million and 100 million is medium companies, Abi, right? Then anyone more than 100, so it's trying to tell that this company is a large company. It falls in the large category, so it's taxed at 30%. You know, small companies are exempted from tax, 0% tax, CIT, but you'll still pay their 2% EDT. Then medium companies are taxed at 20%, okay? So the requirement is compute the income tax payable for the relevant years of assessment. All right, let's solve. So you start by writing the name of the company, that is Igbedowo Nigeria Limited. You write the heading, always write your heading, which is the requirement: computation of tax liabilities for 2017 to 2020 years of assessment. Then you start with 2017 year of assessment or assessment year. As you can see, they made a loss of 80,000 naira. Okay, so you can't charge tax in that year. So this loss that they made would obviously lead to loss relief, right? It has already shown an accumulation of 80,000 loss relief. So loss relief brought forward, there's nothing brought forward. Then loss for the year, you can see, is 80,000 naira. So the total loss is 80,000 naira. What can you relieve? That slash relieved dash. You can't relieve anything because there's no profit. So the unrelieved loss to be carried forward is 80,000 naira. That's what you go and set off in subsequent years, right? Now you move to capital allowance. Remember, we said it's in one of the rules that loss has preference. You treat loss before capital allowance. So you move to capital allowance. Capital allowance for that particular year of assessment was 5,000 naira. What can you utilize? Nothing. You can see dash because there's no profit to charge it against. Okay, so unutilized capital allowance will be 5,000 naira. This one, so you carry it to the next year. You know, there's a video on capital allowance on my channel if you want to understand capital allowance. Okay, so the total profit is nil. I mean, there's no profit in that year. CIT at 30% is nil. You can't charge profit on the loss, and your education tax at 2% of assessable profit is nil. There's no profit in that year, so there can't be education tax. Now we move to 2018 assessment year. Now coming to 2018 year of assessment, you can see that they made a profit of 40,000 naira. Beautiful. Now there's a loss you have carried forward of 80,000 from the previous year, right? Then for the year, there's no loss for the year because they made a profit. Okay, so the total loss is 80,000. What can you relieve out of this loss of 80,000? You can only relieve 40,000 naira, right? You can only relieve 40,000 naira. So that's what you're going to relieve. Then it will remain 40,000 unrelieved. That's what you carry forward. Okay, now you move to your capital allowance. Capital allowance brought forward is 5,000. Remember, from previous year. Now your capital allowance for the year, that 2018 year of assessment, is 3,500. You can't relieve anything, right? Because loss has already swallowed the old 40,000 profit. So you can't utilize that, or you can't charge that capital allowance against anything. So you carry it forward. Okay, so you have 8,500 to carry forward in terms of capital allowance, and in terms of loss you have 40,000 to carry forward. Now you can see that your total profit is nil. You don't have any profit. So your CIT is 30% and is charged on total profit or taxable profit. That would be 0, right? 30% of 0 is 0. Then your education tax is 2% of assessable profit. Let me tell you something. Any year that a profit is made, there must be tertiary education tax. Okay, some people always ask this question that how do they charge education tax? Is it 2% of accessible profit after loss and all of that? See, whenever profit is made, whatever the accessible profit is, that is what you should charge your education tax rate on. Okay, so before you take out loss, right? So just know that education tax has nothing to do with loss relief or capital allowance. Once a profit is made, charge your education tax. So education tax is 2% of 40,000 naira, and that gives you 800. So we move to 2019 year of assessment. Now in 2019 year of assessment, they made a profit of 20,000. Guys, 2019 year of assessment means 2018 accounting year. Okay, so in 2019 year of assessment, they made profit of 20,000, and don't forget that there was a loss carried forward of 40,000. So out of this 40,000, you can only relieve 20,000, right? Which is the profit available. Okay, then to reduce that loss to 20,000, as you can see, unrelieved loss carried forward. Now you're done with loss. Okay, then you move to your capital allowance brought forward. You are bringing forward 85. For that year of assessment, you have 2,700, which gives you a total of unutilized capital allowance of 11,200. Okay, your total profit is zero. I mean, there's nothing left. Okay, so your CIT is 30% of total profit or taxable profit, and that is also nil. Then you have your tertiary education at 2%. Now 2% of 20,000 will give you 400. Okay, 2% of 20,000 gives you 400, and then that's simple. You move to 2020 assessment year. Now, in 2020 year of assessment, which is the last one in this question, there is an adjusted profit of 50,000 naira. The loss you are bringing forward is 20,000 naira. Okay, so what you can relieve is you can relieve the whole loss, which is 20,000 naira, because there's available profit. Okay, it means you have a balance of 30,000 left, right? So you can charge your capital allowance. You have accumulated 11,200 over the past years. The one for this year is 2,500. So you can actually charge the whole 13,700. Okay, now removing 13,700 from 30,000 will give you 16,300 as your total profit or taxable profit. Then you charge your company income tax on that, and that gives you 4,890. Your tertiary education at 2% of accessible profit is 1,000. That is 2% of 50,000 naira, and that gives you 1,000. Okay, so that's the end of this question. Thank you so much for watching. Leave your questions in the comment section, and I'll see you in my next class. Bye.